What's going on, everybody? Good morning, good afternoon, good evening, wherever you are in the world. I'm so glad that we're here together. It's a Friday session, Aloha Friday, CTM all day long. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing, and we're here for a Friday session. So happy to be here with you all. Weekend ahead, right? So talk of vacation next week, worried if Bitcoin's going to pump. We will see. The bears right here have the opportunity to go ahead and hold the line. If you're bearish on Bitcoin, right now you're saying this is a suckers rally and we're getting ready here to call in the troops for reinforcements and we're looking to hold the line. We're looking to attack. I mean, get on ya. Good luck. No, for real. This is the place over here where the Bears have the last opportunity. And when I say last opportunity, I mean if they lose this line here, remember, before we broke out of this descending wedge over here, we were talking about what would happen in this area here today. We talked about that the first push up probably, we can't predict the future, by the way. Everyone knows that all we're do is able to manage our risk around important levels. Can't predict the future, right? So we thought, what odds are Bears will be able to hold the first line. Let's see what happens on that second attempt. Here's the second attempt coming in right now, and we are basically unchanged on the day. We got a huge data point out of the way, right? We'll come back to the bearish case for Bitcoin in 1 second. We had the July payrolls, right? Beating expectations, but under that $1 million magical mark. $1 million would have said, all right, Jackson Hole coming up in what, 2 weeks? We're looking here to announce and start the tapering at Jackson Hole. And it kind of put us in a range just below the 1 million magical mark and above expectations. Goldilocks here. What's going to happen is the Fed going to be actually setting up some type of taper. We're going to be following that closely in the weeks ahead. It's impossible to say right now. We could follow what the market's reaction is, though, right? And that's why I have over here the 10-year. The 10-year, you could see coming out of this aggressive line of repair, breaking out. All those that were in the CTM training session yesterday know exactly what's going on over here because I was talking about it, right? This is, by the way, only the second time, the second possibility. It was back in April, the first line of repair. This would have been stopped out, right? This is the second opportunity over here to see that yields are going to begin rising coming out of this. Why it's important. You see this line over here? This is the most important line in the 10-year yields. If we break above it, right, Fed starts tapering, all of a sudden the market says, hey, wait, when are they going to start raising rates? And all of a sudden you see expectations start rising. Is it possible that we break, boom? If that happens, is that going to provide rocket fuel for Bitcoin? Whoa, what are you talking about, Jordan? How is rising yields going to be rocket fuel for Bitcoin? And do we have any precedent of that? Listen, this is just me and my hunch, my intuition, my instinct. Let's watch out for it. This green line, by the way, this green line is when like you get like this is aggressive and good, but this is like the green light that like we should be starting to break up. And you could see we have a big confluence. This is resistance. This was support, this trend line all the way up all for about a year now. You have to break above that line and that line together for this really to take off. Would a rising dot, would Bitcoin perform best over the second half of the bull run with a rising dollar or a falling dollar? I know many people think that a falling dollar is bullish for Bitcoin as Bitcoin's traded in dollars. There are many instances of occurrence where you're looking at a bullish dollar and gold stronger. There are many instances where you're looking at a strong dollar and Bitcoin stronger. Actually, every time the dollar has performed the strongest over the last 10 years, Bitcoin has outperformed, right? Speaking of the dollar, let's take a look at this because yesterday we were lining up our look, just managing risk. We pointed out a break to the upside that would put the next leg into the upside while watching the support line over here, because if we broke down over there, we could go either way. Here it was right here. Let's take a look real quick. Watching on the upside for a break of this trend line. This is the trend line that will keep us safe. We're going to just keep it here. When price breaks above it, we'll be looking for further dollar strength. And there we are. We got the break above today, and we're looking for that continued dollar strength. Is perhaps the expectations that the Fed is going to be tapering or setting up, I should say, a taper. Now, we don't know if the Fed could taper or not, right? There's a difference between quantitative tightening, the Fed actually removing liquidity from the system, and the Fed laying off the gas pedal. If you're going downhill, down a mountain hill, right, and you have all the momentum, do you need to press the gas and go faster, or could you lighten up on the gas? That is tapering off the gas. You don't need to keep throwing all this massive amount of money at something that's already a forward motion. Something that's in motion tends to stay in motion, right? Laws of physics over here. That's the markets right now. By the way, if you're just joining us, I'm so glad that you're here. Could you go ahead and smash the like button, right? Could you go ahead and, wait 1 second. Whoa, rewind. Robert, I saw this comment earlier, right? You'll notice on my charts, I don't ever include volume. There's a reason for that. What I'm trying to do is take something so complicated, the markets, and what I'm trying to do is simplify them down as much as possible, right? Volume, to me, is not something that I use in my analysis at all, ever, all right? So, look, anyway, that's not for me. And then we had another question over here regarding Jordan, yearly return, conservative 70% yearly on Bitcoin. How is that calculated? Is it the yearly low versus the yearly high? No. Look, you could line it up from any 2 time points. You could start on August 2021 and then stop that in August 2024, or you could use the first of the year. When you're looking at the average compounded return in the past, they're using January 1st to December 31st. That's how that's being calculated, not from the yearly low to the yearly high. Just wanted to get that out, right? Volume is irrelevant. If I was trading stonks, then if I was trading stocks and I was using something like the CanSlim method, and if I were trading stocks and actually earnings mattered, that's probably what I would be doing. At that point, yeah, back in the day, volume mattered. I'm not a volume guy. You all know that. It serves me well. Boom. Gold is getting rocked with those rising yields John's pointing out, right? Rising yields. Is that bullish for gold? No. Right? We were noticing, by the way, as yields were falling, we made the comment this week, hey, why is that not bullish for precious metals? We're seeing yields continue to fall and we're not seeing precious metals rise. Just observations. Often you want to make observations in the market. By the way, let's just take a small peek at this because I wanted to find this. Yesterday, those that were in the CTM training session know why, because I was talking about perhaps this was the bottom of yields over here. This was also this week on CTM. Not trying to call a bottom, just looking at the market, right? The perfect storm. Is it actually brewing for Bitcoin here? Are we going to see rates, bottoming out around this range over here? And are we going to see them rising back up to test what is the most important trend line in 10-year yields? The most important trend line in 10-year yields. We'll be watching it. We'll be watching it from afar. Let's move over to Bitcoin right now. Let's check out what's going on. Ethereum, we're going to take a look at it. Alan P. Alan, I don't know if you're back from China or not, but I saw you active this morning, jumping all over. Always pure signal. We'll take a look together. Starting off, going back to that bearish case for Bitcoin, right? Should we look? Boom, boom, boom. Mr. This is a Friday session. The flow is going to be a little bit more relaxed, just hanging out with my fam, enjoying life, enjoying our time together. When I fade out when minimizing graphs. All right, I'll have to try not to minimize graphs then. The quickest solution, right? What does it mean for precious metals? No, they are correlated. The fact that we were seeing yields low and precious metals not responding, perhaps that was the market forward looking and actually looking to some type of tapering coming off. And then perhaps the conversation changing to yields rising, obviously very, very bearish for the precious metals. What that's going to do to the Nasdaq as well, I'm interested to know. We'll have to take a look at it. You can see the Nasdaq right now off almost 0.5%. feeling the pain the most. Stocks like it. I mean, stocks in general. S&P likes it. It's saying, all right, well, you know what? Even if the Fed's going to taper, if the Fed is going to try to raise rates, that's a long time coming. We got a while to run right over here, and you can see the rising yields putting pressure on tech this morning. Dollar breaking out to the upside off of that last trend line. Taking a look, perhaps next at that next swing high. We have the line in the stand. It's still the same line now that we have another touch to it. As long as we're above this line of support, very bullish on the dollar. Bringing us back to Bitcoin unchanged on the session. Coming off about Asia keeps selling Bitcoin, right? What's up with Asia? They just keep selling Bitcoin, right? And down about 2% last I saw overnight. Woke up this morning, close to unchanged. Before the payrolls unchanged, then came off 0.5%, now back unchanged on the day. It's taken a look at the most important trend line in crypto. By the way, just so everyone knows going into the weekend, right? This is blip, 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 blip. Samir, thanks for that. That was just me playing the videos from this week. Very good. Listen, I have two lines here for the most important trend line in crypto. I want you to focus in and see what I'm looking at and why. I'm going to come up to the candles over here, and I'm just going to go ahead and delete the top line for 1 second as not to confuse you. And then we'll focus on what is the most important trend line in crypto. And this is the line that I've had since forever, right? And then we had that touch right into it. Now, as we're getting close to the line over here, and it's important to line this up well. By the way, I do believe a break of the most important trend line in crypto should be pretty powerful, right? It should be a bang, not a whimper, if it's going to hold, right? It's a big event. There's a lot of there's a lot of I don't want to say consolidation, like a coiled. The market's very coiled in this area. If it's breaking it, it should be a breakout, right? Now, over here, you all know what we do. How do you place a trend line off of one touch? Conquering the markets all day long, baby. That's how you do it over here. You clone the trend line, and then you go to where the peak is over here. I'm going to bring it down and touch the peak over there. You can see that we peaked out over there again. You got to clear this area. You got to clear this area for that breakout of the most important trend line in crypto to be legit. I put it around 43,000 and above. That's when you have confirmation that you have broken out. Now, some of you might be looking for a retest and a resumption. Okay, that's your plan going into it. You might get it, you might not, right? By the way, that retest, you might see, and this is assuming that we break out, obviously, right? We already started off with the bearish case for Bitcoin. This is the Alamo right over here. Bears got to put up a fight. If the Bears lose this, at that point, liquidations, and then you got to up here, that will be the next time the Bears are able to go ahead and put up a fight as we approach the area of the all-time highs on Bitcoin. So for a while, they could get wrecked. And that's what we're looking at over there. Bringing it back over here to the most important trend line in crypto, right? I was going off on something, then I forgot what I was talking about. Oh, yeah, you might see a breakout, and it might be powerful. And then and then we could come back and retest that, a la 2017, July into August, and that's what happened within that first wave, coming out of that first wave. Or you might have a textbook quick breakout, retest, resumption. Hey, that's easy peasy. You should be all over it. Or you might not get it. You might not get a retest. The consolidation might happen up higher, and who knows what it looks like, right? So for me, the way that I do it during the bull market is I don't wait for the retest. When I get a breakout on Bitcoin, I take the breakout. Now it's not always the best, but it does have the characteristics of breaking out and not looking back. So therefore I take the breakout. That's what I do. You make your own decisions. I just take a look at these charts, and I talk about them. And, it helps me have massively good plans in place that have yielded massive amount of fruits. And it's up to you, how to manage your own risk. If you're asking someone, by the way, about the architecture of a trade, then you probably shouldn't take it. If you're asking someone, Should I trade with leverage? You should not, right? Experts only. Make sure that you take responsibility for your own decisions. It's the markets. If you don't do that, you're going to get wrecked. All right. Thank you, Just Random. This is the comment of the week for me. I appreciate that very much. Learn more TA from Jordan than any other books. Thank you, bro. Absolutely. And just let me like piggyback off that. Just random. CTM across the board, right? CTM. What is CTM? Who is CTM? Who cares? It's a label, right? But when I see people out on Twitter and I could see their TA, I know who is CTM trained. I know who is CTM influenced, and it's awesome, right? I don't care if they say it or not. That is meaningless to know that we're helping, as many people as possible continue to up their game, to continue to level up, and to go on to do great things that are going to affect many people in the world. That to me is pure joy. And I'm grateful for it and for all the parts that we all get to play together in all of this. CTM across the board just keeps getting better and better, right? CTM is everyone involved, right? Everyone. Let's take a look. Let's keep going over here. That's what we're looking. Everyone should have the clarity needed this weekend on their own to understand if we get a break of the most important trend line in crypto, why, when it's confirmed, when it's not. Everyone understands the bearish case for Bitcoin and whether or not they're able to hold the Alamo right here or not, right? This is their time right here. If you're a Goonie and you're bearish on Bitcoin, this is your time right now. All right. Bullish case for Bitcoin, CTM. This is when CTM started making the bullish case for Bitcoin, getting everyone, because of the 4-year cycle, because of the 4-year model, to preemptively front run the halving event and the supply shock, right? And then people are like, could you imagine how many? I've never seen so many trolls in my life become bearish on such an extremely bullish instrument. And that happened over in this area, right? I bought the dip. Did any of you buy the dip? If you bought the dip, go ahead and write buy the dip. I bought the dip or whatever, plus 1, plus 100, plus 1,000. Here we come right now, getting ready to attack. Let's take a look. Not at this. Not at this. This is beautiful, right? This is beautiful. Over here we have, Team Randall, Ian. By the way, these two charts, do you see that they're the same? What? They don't look anything similar. What are you talking about, Jordan? Let's take a look at this over here. Ian, the professor. By the way, we're coming out of the whole time. We worked through several different things. This model that we use together, by the way, it's what? It's a collective piece of artwork over here, trying to get as accurate as possible. But the whole time, as we, first lining it up from the halving, then lining it up when price made that new cycle all-time high, right? And then us saying, listen, we think that the best thing going forward in order to get the last part of the race right is going to be lining this up from the mid-cycle low. Now, we don't know that the mid-cycle low is in yet or not. It is possible price could come back down over here and take out that low, the mid-July low. It's entirely possible, but it looks like potentially that low is in. We're lining these cycles up then from that mid-cycle low, and you could see the price action coming out of it. It does like eerily mirror what happened in these previous cycles at this particular time. Now, I know people tell you that you can't do this, but guess what? You could do whatever you want in life. You get to make the rules. Don't let anyone tell you different, right? Now you could see that price so far since Ian last updated this has done what? Well, it's consolidated sideways, exactly as it did that previous last two cycles. Does that mean that it's then going to pounce up here towards $55,000? No, it doesn't mean that. We have no idea, right? Now, is our expectation that perhaps from this mid-cycle low into that cycle peak is going to be approximately 150 days, and it's going to have two 60-day waves, wave 1, wave 2, and then into that liftoff period, and boom, that's my expectation. That doesn't mean it's going to happen, right? I'm watching it, and by the way, whatever happens from here on in is going to give me another data point. It's going to make the model 4 years stronger going into that next cycle. That's what we're doing over here. And then you could see, imprint this in your mind where the two charts overlay over here, the green area. Imprint that in your mind, and now look at this chart. And here you could see that right over here in the darkest green over here. That over there is Ian's part of the model put over into the collective model of CTM. And that's how you could see that these two mirror itself. Of course, there's room for deviation. We don't know that the current price action is going to resemble this at all, right? But going forward, it's going to print and do its own dance, and then we're going to have another place to overlay the most probable mean of not 2 but 3 cycles going forward. Beautiful artistry taking place, but then here we are. Here we are approaching the most important trend line in crypto, and we happen to be, right within the mean of the model. Good stuff. Let's see if that continues. We'll keep watching it, right? My expectation, by the way, is that, why we've been mirroring closely, it's easy to see in hindsight. It wasn't easy to see in real time, closer to the double wave that took place in the 2012 cycle with wave 1 and then wave 2. It's my instinct, my belief that we're going to more closely mirror what happens in the 2017 bull market coming out of that mid-cycle into that cycle peak. Now, here's an advantage. If we wind up taking longer, let me come back to Ian's over here. All right, boom. If we wind up taking longer, right? Here you can see in green, this is the 2012 cycle, the 2013 bull market. If we're towards the bottom of this area, that might lead us to believe that as we are consolidating much further, that off of liftoff, it could be a more aggressive angle as it was in 2013 compared to that 2017 bull market peak. Things that we're watching, things that we will continue to observe to make sure we get it right, because it matters. It really is the difference between doing legendary things and hey, I own Bitcoin, and if it goes up, that's good. I don't really care if it goes to $100,000 this year or next year or by 2024, whatever, So, Sam, it's wild how closely the first half of this cycle was mirroring 2012, and now it's mirroring 2016. Truly resembles an average of the two. Signal all day long. Sam, fantastic observation. This is a great question that was put into the chat, I think 300 times yesterday. Please don't spam the chat, right? Jordan, would you say I'm late if I'm looking to enter heavily for the first time when price breaks the most important trend line? I'm looking to hold long term, and I'm 20 years old. Let's take a look at that really quick, right? By the way, you all remember I was very loud about it, right? When people were signaling that the bear market's here, right? I was saying I'm buying the dip. This is a 50% drawdown mid-cycle from the all-time high. I didn't plan on it. I was only expecting a 40% drawdown. People like Raul were very clear that, hey, listen, make sure that you understand there could be at least a 50% drawdown during this bull market. But when it happened, I used it as an opportunity. I bought the dip, right? I made a purchase at 39,000 and 33,500. People at the time mocking me. How does that feel? It feels good. I'm glad I did it. What are you talking about? Should you wait for the most important trend line in crypto to break if you are looking for the first time to take a position in Bitcoin? I mean, look, when the most important trend line in crypto breaks, there's a higher probability. There is no given in the markets. There is no guarantee. But when this line breaks, the odds that this is the low mid-cycle and that the golden ratio has held for the third cycle in a row, the golden pi ratio, 1.61, the odds have greatly increased, right? Right now, before breaking out the most important trend line in crypto, if the bears hold the Alamo, there's the possibility we come up. I didn't mean to do that. There's the possibility that we're able to come back down and then test these lows and even break them. And if that's happening, that might mean we're going to get that capitulation low. Boom. And if that all happens, by the way, we are lining up whatever that low is, to whatever the past lows were to keep moving forward. Like then this chart will just be lined up not from here, from wherever that low is. That's been the model the whole time. All right. So do I think that you should wait? I bought the dip. Are you waiting? I mean, now that you're at the line, why not? Right? Now that you're already into the line, wait for the confirmation. Do I think it's a good thing? You're planning on holding for the long term? Yeah, I think it's fantastic. But I think more than that, you should invest your time and continue spending time with us and just, like give yourself a couple of months. If you're right on time, you're making this investment, like see what your knowledge base is 2 months from now, investing 5 days a week, 1 hour a day. Better yet, join the training program below, link in the description, and work with us with the CTM principles, the CTM strategy, and do all our intimate private training sessions together. And in 2 months, let's see where you'll be able to answer these things for yourself. That's very important. All right, this is Ian's work. Let's take a look a little further, right? He's showing us this is 2012. Since this was last updated, prices moved sideways a little bit. It continues eerily mirroring the price action of the mid-cycle low. Are we looking at and setting up? I mean, this is what we're setting up. CTM modeling crew is looking for understanding that there could be deviations, but we're looking for that one wave, that second wave into the lift off, and that melt your face. This is the melt your face off move, by the way. It's going to be quick. It's going to be sharp, right? We did all this work back in March and the first week of April. Everyone CTM trains. Now, trying to line things up with the accuracy that we do, right? Hey, listen, it's nothing easy about it. This is probably one of the most difficult things that anyone could do, right? And over here, when I thought we were coming out of the V, right? I called over here, hey, this is the beginning of the V. But then as soon as that wasn't a V any longer, right? I said, hey, wait a second, that's not a V, and that's not happening. It's a matter of not like trying to say, hey, I believe that a year in advance, I believe that the bull market's going to peak out in September, towards the end of September. But then months in advance being like, hey, that the market's showing me something different. This is, we're changing our expectations to now to October, right? And then maybe, 6 weeks later, seeing that this low is taken out, that's not right. We're looking approximately 150 days from that mid-cycle low. It's not until we get over here that we're able then to line it up and say, okay, now it's looking like towards the middle of December is going to be the cycle peak, right? There was nothing wrong about that. That's everything correct. You're a student of the markets, and as the market presents to you more information or data, you are evolving your thesis. That's how it works. If anyone thinks that you're trying to go ahead years, months, or weeks in advance, predict the future, you are starting from a point that's so far behind. I don't know that if you might want to you might want to watch Netflix. You might want to collect the government dole, because you're probably never going to make it in the markets. That's important to understand and know, right? Because you're competing against gladiators. You're competing against, some of the smartest minds in the world, competing for one of the most precious resources in the world, capital, right? And if you don't have what it takes, it's best to concede right now and get out. Now you have the advantage of working with us here at CTM, and we're quite forgiving and loving people. There's no question about that. I want to take as many people with us as possible, right? But look, at the end of the day, few are chosen. Many are called, few are chosen. And Ian continues over here showing us 2016, right? Look, it's actually mirroring closely that 2012, huh? That 2012 cycle coming out of that mid-cycle. But it's so close between the two, it's ridiculous. We had that sharp up move. Many people at this point, and this is good, many people who do not believe that they thought this was like sorcery. And then when they saw this jump out of that mid-cycle low, they said, wait a second, Now I could see what these guys and girls have been trying to put together. Now it's clear for me. And that's awesome. You're so early, it's ridiculous, right? Many people, as we get to the cycle peak, are then going to see it. And then they're going to say, well, that's not going to happen next time. The halving's priced in. And you're hearing that already, right? I showed you the clip this week. Willie Woo is saying that the halving's priced in for the next cycle. Maybe he's right. I want to know all vantage points. I want to have multiple points of reference to be able to continue to like try and true my own thoughts so that, if for any reason I find out that, what I believe to be the greatest clarity is not, then I know how to firm that up. Anyway, let's talk about Alan P. Alan P this morning jumping into his home, the Ethereum channel on Discord, laying out some charts and some thoughts. Let's take a look at this over here. Let's start with his own thoughts. This is the first chart we're going to be looking at. I'm going to come back to it in 1 second. Alan P, lots of love, my brother. Some pretty heavy trendline and horizontal resistance on the US dollar chart. This is Ethereum, expecting it to be hard work to regain the previous upward channel. And it looks that way with a retest to find support ongoing. Let's take a look right here. This is what he's trying to regain this channel. By the way, this was the first peak of alt season, right? Here, I'm going to raise my hand and say 4 days before it peaked, here on this live stream, we said, watch out, it could peak this week. Alt season should, by the way, raise my hand again. We called out alt season a year and a half before it began, as it exactly began into that November, December 2020, approximately 6 months after the halving event, and then the peak, right? I know that there's many like altcoin channels out there, but it's not Signal. It's not Signal at all. You got to follow the signal, and you got to, when it's so clear and so right, you got to give it a little golf clap, and that's all it deserves is a little golf clap again today. But anyway, it's just what we do, right? And then you can see that, boom, and then this is where Ethereum is trading differently. Ethereum, is acting stronger than it did in its previous cycle 4 years ago around this time of cycle, but it continues to mirror very, 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 very closely that 2016 Bitcoin run. Right here, Alan is looking at price coming back, retesting, hoping to firm this line, this trend line of broken resistance now into support. Whether or not it firms up over here or lower, we're hoping by this lower trend line over here, at least it's able to not only find confirmed support, but resume back off and be into this channel. And then he takes a look over here on the 8 hour. Here's just a clearer picture. Always on that 8 hour, you could see the clarity over here. It's below that last trend line. Beautiful, beautiful chart work over here by Alan's chart work is always very clean, and it's beautiful. Ethereum, Bitcoin, let's check it out over here as well. He added some thoughts. He says, Ethereum, Bitcoin has been interesting for a while, right? It's retracing, looking for support after many bullish days, that breakout of that triangle, but remains a bullish looking chart. I'm tempted to rotate a little more into Ethereum if we see a retest and a resumption. And here you can see over here, breakout, and now it's coming in for that retest and to see if it resumes off. And as it's running here out of this chart pattern, he's saying that, because Alan's, I don't want to speak for Alan, but I am speaking for Alan when I say that, he believes in the bullish case for Bitcoin. He also loves innovation. He really is attracted to technology and innovation, and that's why he has this great interest and love for Ethereum. He's watching what's being built. He's watching right now. Oh, I hope I have his comments over here. I don't. He's watching right now as, there we go. Short term, anything could happen, but have to even be more bullish on Ethereum. Looking forward, the EIP 1559 was a big step towards POS, proof of stake. Deflationary supply right now as fees are being burnt, layer one sharding, and much more. It's exciting. He wants to be involved, right? And he's saying now that we've seen this different behavior take place this cycle Because last cycle, you saw this break down out of the triangle, this point of cycle, or about within the next 60 days. This broke down and then set up alt season number 2. This time, we see it breaking out to the upside, Ethereum running, continuing to lead. And until this pattern breaks down right now, we expect from here to the cycle peak of Bitcoin that Ethereum is going to lead, right? Or I do at least, until if this pattern is a false breakout to the upside, then that will no longer is the expectation. He's looking actually to lean into this right now, seeing where the lead is. I wanted to share one other thing with you. This is from Enrico, right? By the way, so I looked at the chart and I read the things over here. This was just in my Twitter feed. I follow as many people from CTM as possible. And if I'm not following you, it's only because I haven't had the opportunity yet. By the way, direct messages on Twitter, I'm so sorry that it's not that I'm not responding to you on purpose. It's just impossible to go through that many messages. It really is. So listen, I saw this chart and right away I was looking at it and I knew that like, all right, well, this person is CTM trained. There's no question about it. I go over to his profile, right? And I see Child of God. Oh, it's beautiful. 19 years old. Wow. And then I read, right? He's an independent cryptocurrency market analyst with a profound futuristic mindset. And so, wow, this Enrico really, like, if he believes that about himself, then I'm sure it's true. Like, for sure it's true. And can you imagine being 19 and already with this type of awareness about yourself and life? It's beautiful, you know? So then I wanted to look a little further to see what he's doing over here. And Enrico, I saw a little bit. Look, this is lengthening cycles here. I feel like it's me versus the world on this one. Not, well, I got CTM crew. No, I look, it's not my base case whatsoever. You know, I feel like a lot of people out there, for whatever reasons, are really leaning heavily into that. We know now that if the mid-cycle low is in, and as we come into December, we will know by the price action whether or not we are looking at this cycle peaking or we're entering that lengthening cycles. I love how he's thinking for himself, though. Absolutely love it. Good stuff over here, Enrico. Thanks for sharing. It's a good session. Yeah. No, D-Nights. Definitely. No, just think about that in a different way, right? He's a 19-year-old analyst. Where do you think he's going to be when he's 25? Where do you think he's going to be when he's 30? And what I don't guarantee, I can't. But the odds are, being that the atmosphere that he's in and the work he's doing, kid's going to be a multi-millionaire, within 5 and or 10 years. No question about that. He is an analyst. He's here analyzing the markets, and he's doing it better than the majority of the institutions out there. There's no question about that. Yeah, don't let anyone tell you what you can or can't be. You could be whatever you want. It's your life. You get to decide how it works. But let's support each other, Let's support each other, So then, anyway, where else are we looking? Stock to flow, not for me, but like it's in the model, right? And you could see that Ted has included the stock to flow. You could see these bands over here where my mouse is right now. This is the stock to flow bands. And, we came towards that lower deviation of it. And it looks like it's held and we're rising up right on time. Stock to flow is, you all know I just always love the pretty colors on the charts of showing how many more months to the next halving when it came to Plan B's work, Plan Bitcoin. But the stock to flow model in itself, it serves a purpose and it's very good. It's not what we're trying to achieve. We're trying to find and to be as accurate as possible, riding not only the 3 phases of the Bitcoin cycle, but the different waves in between. That's CTM modeling, right? So listen, good session. Good session. I'm going to go. That's right, Prosperity. You are free to leave. You do not need to be here. If you don't like getting the greatest clarity across the markets, then do not stay here and or spend and invest your time here. That's all good. There are no hard feelings whatsoever, right? But if you're here and you're new, go ahead and subscribe to the channel. You have stumbled upon, because of the algorithm, a really unique place, a special place on the internet. Nothing like it that I've ever come across. I'm so glad that you're here. It is good that you're here, and the market continues to be on hold ever since we started this session. Let's just look at that. Boom. That line remains the same though. Will there come a time when that breaks and sets us off on gold? Right now, just stay on the sidelines, wait for the repair. Always wait for the repair. Silver had the fake out. I'm going to come over to the candle charts so you can see this is how CTM protects itself. There's a breakout of the line. The retest is a failure, never giving you the resumption. That's why we don't take breakouts. Bitcoin and altcoins during Bitcoin's bull market aside, right? And then boom. Yeah, silver's getting crunched. Oh, Wall Street bets. Oh, they should be here with us in CTM. No question about that. All right, everyone. Good session. I want to play some honeymoon, though, and just check in with all of you before we see what's next. So I'm going to do that. Come back over to my area charts. What's Ethereum doing? All right, this is what I want to look at on the candles over here. So you could see that. Look, look. Blah, 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 blah. Jordan, could you hold the thought? I am taking this line over here now. After the breakdown, you see the bears couldn't get any momentum, and that was a failed attempt by the bears. And now I'm moving it to that touch over here. This is the next line for the bearish case for Ethereum, or actually for the bulls to lean off of. This is the line of support, and as long as it holds, Ethereum is running hard and good, right? This is the line of caution, though, if you're bullish on Ethereum. If this is to break, watch out the downside. That would be the next opportunity for the bears to attack. Let me bring it back now. Steep and powerful, steep and powerful. Yes, Patrick, hold on. Yeah, I laid it out for everyone ahead of time, in real time. Let me come to the candles. I took the next line of repair on Bitcoin, right? I'm in this trade. I'm participating. I got stopped out on that trade that I presented to you on Wednesday, and then I showed you that day as I was taking that trade. I said to you all, listen, if I get stopped out, the next thing I'm going to do, and I took this trend line and I went like this, and I said, I'm going to most likely take that next line of repair. I saw the price action coming out of there. Jesse Livermore type style. You have to be you all know my ability. And, as I did it, I'm in the trade, right? And I'm waiting to see what happens. Stop loss now below this peak over here of where we just, all we did was run these stops, liquidity event, and bounce off of it. My new stop loss is down over there. I am in the trade. I am not. Some of you I talked about, watch Wednesday's video. For a lot of people, it's the breakout of the most important trend line in crypto and a stop loss down at the lowest price point. For most people, that's good and that's correct, right? Now, you could also use this one. It's the same risk, whatever you're risking, whether you put your stop loss down here and or up here. Now, your profit potential is much greater to the upside, right? Go back, watch Wednesday's video. It was a true masterclass. You cannot find that stuff in books. There's no way. You can't find it anywhere else. But you have it here, and it's shared freely because we want to take as many people as possible with us. All right. Where's my honeymoon? Oh, we got to go with the instrumental. All right. Thanks, Alan. I appreciate it, my brother. Gus. Thank you. Thank you so much, Gus, for your support. Gino, I was worried. I was worried. Thank you. Thank you to the moderators, CTM at its core. Thank you, Joseph. Thank you, Kelly. Boom, FA. Signal. Thank you, Keith. Good way to close the week. What a beautiful way to go into the weekend. Thank you, everyone. Thank you so much. CTM, everyone. Thank you for contributing to make this community so special. Greg, thank you for everything that you've give. Gene, thank you for everything. Every single one of you, Danny, every single moderator, George, all of you collectively, Peter, Miguel, every single one of you, Michelle, Jan, every single one of you, thank you so much. You know, the Hypernova, thank you, my brother. Thank you. Do you have a question you want to go out with? We could take it over here before we go into the weekend. You too, PD Capital. Thank you so much, my brother. Right? Everyone have a beautiful, beautiful, beautiful weekend. Thank you, Jing. Thank you so much. I'll talk to you all on Monday. We're going to go ahead and get it. All right, everyone. Take care. May God bless you.